We are here on Real Estate in the Lowcountry, and of course our friend Benji Gecy is with us today. Always good to see you.
Yeah. Thanks for having me again.
Of course.
Got a big rate report this week.
Another filming, another rate report, right?
That's right.
Yeah, we got to know though.
Well, I think everybody knows we've hit the highest rates in 23 years, almost a generation, and we bounced off of those highs pretty nicely this week. So the last 5 days, down about 50 basis points. And as you can see from the Freddie Mac rate chart, rates peaked out at about 7.5%, but we were quoting lots of rates in the 8s, believe it or not, and some of the investor loans almost 9% just a week ago. But a nice dip this week, which is good news. I'm still sticking my forecast. I think VA rates and conventional rates are going to be in the 5s by the end of the year. So we'll see if we get a lot of momentum here. And like we've talked about, rates, when they go up pretty rapidly, and when they fall, that usually happens pretty quickly as well. So I'm hoping for good news fourth quarter here, but we've had a good week of rates right now. Rates are settling in, conventional back down around 6.97%. VA and government's in the mid 6s right now. So we've had about a point move in about 5 to 6 days. So nice rates right now.
Yeah, an exciting move. We like that move. So I know you said you're sticking to your prediction about in the 5s by the end of the year. Do we think we've hit that high and we're just going to continue to go down to there, or do we go back up and then down again?
I think so. So the October 22nd highs that we blew through, we bounced off the highs a week ago. Rates really improved into January of this year, and we had rates in the 5s. So I still think we're going to be there by the end of the year, and I think it's going to improve. We only have a couple months left, so a slow burn, I don't think we're going to get there, but I think rates are going to rally pretty good, especially after this next Fed meeting. That's really going to tell the markets where we're going to be with this next rate hike. I don't think they're going to raise again, but they've already baked that into the markets. Once we get past that, I think the last 30 to 45 days, we're going to see some pretty good rates. So we'll see what happens. We're going to keep you up to date here.
Of course. Yeah. But of course, everybody's hoping that prediction that you're making does come true. So we want to switch gears a little bit because we're having some exciting news. You were given a really amazing honor just last week. So tell us about that.
Well, we want to thank WHHI. We were ranked as the #1 broker in the state of South Carolina for the month of September with the nation's #1 lender. So 25 years, I've never accomplished that, and I've had some great months. So with the rates the highest that they've been in 23 years, lots of brokers, lots of banks, lots of realtors, very slow. We're very busy. We had an unbelievable month. And the campaign, our statements of shop your rate, saving people thousands of dollars, there's still people out there buying right now, and consumers, they're making it to our office, and we want to thank WHHI for the campaign. Lots of help from you guys, lots of those customers. 104.9 The Surf, that's a great campaign, but all over South Carolina, we closed lots of loans, and we're proud of that #1 ranking. We'll see what happens in October and November, but there's probably 60,000 loan officers with UWM across the country, and we are in the top 160 in the country as well. So a really high national ranking and South Carolina ranking. And I want to thank Madison and Sharon, our office, for working so hard as well. Team has really deserved that, and we're doing pretty well right now.
Yeah,
so
well, congratulations.
Thank you.
Absolutely. It's certainly a testament, though, to what you have said. Shop your rate. We can do this for you, even in this market. So, and obviously you did it. So congratulations.
Yeah, and it's nice to have those awards and everything, but saving the customers money, getting the 5-star reviews, giving that great experience, easier, cheaper, faster. We're doing really well with that right now, so definitely shop your rate with Beaufort Lending.
Yes. So we've got a little over a minute left, but I know we want to talk a little bit about closing costs and how we can kind of maybe keep those down too, because that's another way that you're saving people when they're...
And that's been an important advantage for us over the last month to 60 days with consumers. We've gotten together with our realtors and really, instead of negotiating the purchase price, we brought the closing cost into it. So negotiating the closing costs, I think, outside of shopping the rate is very important. But what you have to do is, negotiate those closing costs early. Understand what your closing costs are with your realtor and your mortgage broker. Then when you get to the seller to make that offer, an experienced realtor can kind of prep the seller on what you're trying to do. Been very successful over the last 60 days of utilizing the closing cost to buy down the rate and use the 2-1 buy down, 3-2-1 buy down, and lots of consumers, instead of paying a 7.5% rate, paying 4.5% and 5.5% over the next year or two. So just a few tips right there. Use the closing costs instead of lowering the purchase price, and you're going to have a real advantage on the market right now.
Well, and that's just another example of why you were #1 last month, because you know how to do all of those things.
Designing the mortgage is very important, and it's just more than a transaction.
Absolutely. Well, Benji, thank you as always for being here, and thank you for your expertise. And once again, congratulations.
And thanks for your partnership, Betsy.
Absolutely.
Thank you.
Glad to have it.